So I want to welcome everybody to the Active Trend Trading How to Make Money Trading Stocks webinar that we do every Friday at 10 a.m. You can catch the recording and please let folks know that there is a recording. It's posted both on the Active Trend Trading website and on my YouTube channel, which is Market Tech Talk. This week, unfortunately, Mike is not going to be joining us because he has just been having one heck of a time back there in Dallas, Texas. This time with last week he had a leak in his sink. Today he's got a leak in his roof because of all the rain and all that kind of stuff, and had some issues with flashing. So Mike can't join us today unless he may stick his head in a little bit later today. But I know that everybody's been appreciating what Mike has been doing, or the input that Mike has for the individual webinars, both the training webinars on Wednesday night and the market tech, or the how to make money trading stock webinar. So I want to remind everybody that what we cover today is for training purposes only, and that traders should always paper trade any new method prior to the risk of their own personal capital. At Active Trend Trader, we really believe in teaching folks how to trade, think for themselves in a very clear and simple manner. And last week I had a really, I think, a very good refining design trades. Gave a couple of patterns that folks can focus on. Hopefully you found, if you were in your premium member of Active Trend Trading, you found that very beneficial to moving into the rest of the week. And actually put out a couple of potential stock trades that evening. This we're going to be talking about refining your routine. It's a matter of continuously trying to refine what we're doing with regarding to trading. And the more efficient we can make our routine, the more the better opportunity we have for finding the stocks that are in the process of getting ready to move. So let's take a look. What's going on this week? Basically, I as I was looking at the market this week, it was a 4 days shortened week, and no traction in either direction. As we talked about on Wednesday night, this has been it's challenging to find things to be enthusiastic about with the market because it's hitting resistance and bouncing down, it's hitting support and bouncing up, and we're just basically no breakout. And as we close out the month of May, the markets tend to go into a little bit of a summer doldrum, and hence the old adage of sell in May, go away. But there will be individual stocks that are going to do okay. And so on the S&P, the trend is up, but it seems to be losing a little bit of steam. When I printed out this page today, it was down for the week so far. We'll double check the live market to see if it continues to be that way. The NASDAQ hit resistance at 45.50, and on the weekly chart, again, when I did up this presentation, we were showing a doji harami on a weekly chart. That it's a possibility. And a doji harami is a bearish signal at the end of an uptrend. And so we'll see if we're going to get continued weakness going into the market next week. And then finally, the Russell will the Russell lead us down? Typically, the small caps do a couple of things very, very well. One, they give us a signal when the market is becoming more healthy and will tend to lead us up. But also when the market starts to weaken, it leads us down. Outside influences going into this week. Earnings are just about over. We have a couple of earnings that are coming out on AMBA. AMBA has earnings on Tuesday, and we'll see how that goes. It is really, really extended, so there are some potential trade opportunities on that, but typically, they have some very attractive spreads that can be done on the weekly options on that. But anyway, influence for the week, daily, weekly charts still not totally in sync. We still are faced with the good news, bad news paradox. That is, when good news comes out, the market goes down. Bad news comes out, the market tends to go up. But that may be righting itself a little bit. And then we have another report of negative GDP. I think this is the second month that we've had negative GDP growth. And when that, I can't remember if it's exactly, it's three or four reports, if it goes with negative GDP, that can tend to lead to continued market weakening. So we want to pay attention to that. And then price is king, trade what the market's giving us. I always love to put this chart up. This is where we were last week on the percentage of stocks above the 20-day moving average. We had highlighted last week, how we were still, staying below this line, showing that few stocks are we continue to get fewer and fewer stocks participating in the potential uptrend. And again, we're seeing, and then going into this week, what's it showing us? Well, here's where we were last week. Here's the 4 days of this week. One huge down day, hit the 40% of stocks above the 20-day moving average, rebounded nicely on Wednesday, puts in a hanging man type pattern, and then drops again. We had highlighted about a week and a half ago when let me show you where we highlighted. When the stocks were moving up into this area here, we were asking the question, is the run just about over? Because it was approaching a resistance area. And if the pattern was going to continue, then fewer and fewer stocks were going to be actually participating in the rallies. Then this would have been an ideal place for it to turn around. And sure enough, the indices did turn around, and again, rebounded, and then dropped a little bit more today. I would suggest checking this out, because this screenshot was done at 9 a.m. Pacific Daylight Savings Time, and by the end of the day, we don't know if we're going to get this much of a bearish candle or not. It may, in fact, turn around towards the end of the day. We'll see. But as we see right now, we continue the market internals continue to weaken, and we may wind up back down in this area here, which isn't necessarily a bad thing, because if the market does go into a more significant correction, and gets, last October, the percentage of stocks above their 20-day moving average got down to where it was only like 10%. And once that happened, that led to a very nice rebound. And along with some of the other indicators that Mike and I checked, the proprietary type indicators that we're looking at for the early warning alert service that we have, it provided a very opportune time to be buying. So before we go to the charts to see where we were, here's where we were last week. At this time, Dow Jones was up 2.54, 3.5 on the S&P, 7.16 on the NASDAQ, 4.48. Here's where we are today. As you can see, yes, still up for the year, but we have had a pullback over the last week. Right now, it's looking like it's going to be a down week. And so, yeah, Marty, you can always go to the barchart.com, and I have sent out, I can send you a link on how to find that particular chart. Marty asked the question, is there any way he can track that chart on his own? And the answer to that is yeah. So let's go to the charts and see what is cooking. Okay. What do we have going on in the S&P on a daily chart? We had a continued, it was very interesting. We had a huge down day on Tuesday, hit the 50-day moving average. Then we get a nice rebound, but it stayed within this bearish candlestick here. And then Friday, on Thursday, we get, you really can't consider this a hanging man, although it's the shape of a hammer and a hanging man, because it's not reversing. It's not at the up end of an uptrend. But then we get a reversal today, sell off. Apparently, the market was not liking the indication with the GDP being negative growth again for a second month, and it did do a really nice sell off. But then it's right in the process right now. It sold off, rebounded up slightly from this level of support just around the 50-day moving average. But look what's going on over here on the weekly chart, which may be a little bit more indicative. We've got the TSI, negative divergence, turning back over. Does that mean if we close below the 8-week moving average, then we're probably going to test at least this uptrend line, which is the same uptrend line that's shown here on the daily chart. A test there for a potential rebound, or are we going to go into a more significant, downtrend and correction? We've got the stochastics turning over, negative divergence going on the momentum indicator. Looking over here at the NASDAQ. Okay, NASDAQ. NASDAQ was looking a little bit more healthy than the other indices. Basically, we get our big down day after this shooting star pattern from Friday of last week. Break down to the 20, rebounded up nicely, hit resistance at the 45.50 level that we were talking about, and then over the last couple of days has just been meandering. Still looking a little bit stronger than the S&P, but this resistance up here at the 45.50 level looks like it is going to be pretty strong. What we got going on the weekly charts? A little bit more healthy. The TSI has not totally turned over, but it is negatively divergent. You've got negative divergence on your stochastics, and of course your momentum is, we're up close to the old highs, but our momentum isn't coming in, and this is a measure of internal momentum. Same thing what we're seeing over here. It's, this big move over here. See the momentum, how it took off, and TSI took off. And what we're getting is this just kind of this little meandering around the zero line on both, moving sideways. And so, for some time we may be moving into either a lateral consolidation here that will potentially lead to a breakout later in the year, or a breakdown during the summertime back down to retest this uptrending channel line. This uptrending channel line has been in place now for just about 2.5 to 3 years. And so let me answer a couple of questions here. One is and yeah, the 20% of stocks above the 20-day moving average, yes, is on barchart.com. Marty Gino asked, AD for NASDAQ equals a C minus versus an E for the S&P. Yeah, the advanced decline. Yeah, and we see that in the chart, Gino. In other words, the advanced decline line is graded higher for the NASDAQ. The whole is still green. Why? On which one of the charts, Dorothy? Dorothy asked, the whole is still green. Why? Are you going to put in a comment about upcoming article in Forbes? Yeah, I'll chat just briefly about that. If the lower side of the uptrend line is taken out, does it mean we will see a big drop? Potential. That's a great question, Gary. In other words, you're talking about this trend line here. If that's broken, will we see, a more significant breakdown? Well, a couple of things can happen. One is we have to realize and recognize over the last several years that the price action has been respecting this uptrending line here. We get a bounce here. We actually get a violation at this point, but where does it stop? It stops right here at, this is the 40-week moving average, which corresponds to approximately the 200-day moving average. And as you see, it fell below it, found support during this week, and then rebounded very nicely and went on into a significant rally. And so we'll see what happens over here. We can kind of see how, looking towards the future, where the market is really struggling in this area. We're almost range bound. And so that oftentimes is what a topping pattern tends to look like. But oftentimes you can't 100% confirm that until it's, finished its top and it started down the other side. And so we just keep, watching, and this is where this particular market is lending itself very nicely to trading support bounces and resistant bounces, and holding the position, unfortunately, only for maybe 1 to 2 days, because that's how long it's taken it to go from one extreme to the other. So Dorothy, Dorothy, are you talking on the hole over here on the daily chart? Let me get rid of this one. If you're talking about the hole over here, the reason the hole is green is because, well, one, it broke back above the whole moving average, and the whole moving average is the green and pink. That's the whole 8-day moving average here. And then we've had a couple of finishes where the price has been above it. And so that tends to turn the whole back to green. And as I mentioned in the write-up on the market report, review last night, is sometimes this little tick up here where the whole turns green can be a fake out, especially if we get it closed back down below the hole and back down below the 8. And so it briefly turns green for a little bit and then reverses back down and turns back to pink again. I'd like to see more of a sustained move back down and get into one of these, and this would be a little bit healthier for the market. If we get a sustained 5 to 7 days down, that would get us back down into stronger levels of support that could then reset in our early warning system, but also reset and provide us some potential upside trades. Now the Russell, okay, Russell. We spoke about Russell last night a little bit, yesterday a little bit, is that it had basically bounced up and stayed 2 days above the hole, and the hole had not turned green at the time. However, it appears as if this current bounce off the 50-day moving average is turning the Russell green, but it could also be a fake out. What we've got is you can draw this either on your I don't do that. You can draw a trend line down across here, and then you can take that trend line there, duplicate it, and let's just move this down. And as I said yesterday evening in the market update, is we have at least a couple of points, a lower high here, a lower high here, that sets us up for the potential of moving into a downtrending channel for a bit. And as long as that upper line stays intact, this part of the downtrend remains in effect. Let's get rid of that. And so we could, in fact, if we reverse back down and close back below the 50, then just draw kind of a straight line down here. It could take us down before it hits the bottom of the channel, down in the 1200 to 1190. And then Gary has, let me answer a couple of, what is the difference between the hole and the exponential moving average. The whole is basically a moving average that we integrated into our system, Ray, that it solves a couple of problems that we typically have with moving averages. That's one, the lag portion of it, because it is much more timely in its effect. And I use an 8-day whole going along with my 8-day moving average to get better information. Is it considered a head and shoulder? Is it also considered a head and shoulders pattern? Yeah, you can see, you could kind of see, here's a shoulder here, here's a head here, here's another shoulder. And you don't see that much on, I kind of like to look for the head and shoulders pattern, Gary, on the weekly charts because they'll have more meaning. And so Don asks, is there any thoughts on the impact of the Russell rebalancing? Shouldn't be too much, Don. That we may be seeing a little bit of that today. Typically, those rebalancing things are fairly short-lived. What would I want to see to be able to short the Russell? A couple, either one or two things. One is if, let me draw another trend line in here. As long as I stay below that trend line, if I reverse back down and let's say take out the 8-day moving average again, that would be a potential to get short. But as we see, it might be very short-lived because look what's happening. We're hitting support here at the 50. If we actually get back up into closer to this trend line here, Dorothy, that would also be a potential area if we get reversal candles to look at doing a put trade on the, I would use the IWM, not TNA, and I wouldn't touch TZA, which is the inverse of the Russell 3-time leverage index ETF. I wouldn't touch that with a 10-foot pole. I mean, it's the old adage, I wouldn't trade that with anybody else's money, simply because it is subject to partly what they call kind of like backwardation or contango with commodities. It faces the same thing. It loses value almost every time they rebalance. And so unlike TNA, which tends to act in the opposite direction, the inverse in 3-time leverage index ETFs, because of how they have to, the entities they have to buy to be able to emulate a inverse ETF, it winds up losing value, losing money, and you can look back on the history of that, the number of times where they've had to do reverse splits to rebalance the individual inverse ETFs. So those who do trade the reverse index ETFs, I mean, it's fine, but the thing about it is don't stay in it for more than a short period of time. So, wow, those are great questions, guys. I appreciate that. So any other questions on the market? Because I think we're just about there. And let's flip over here. I'm gonna add on to a little bit of Dorothy's question. I'm gonna flip over here to the IWM. IWM. What we've got going on IWM is same type of thing. As you can see, I've been watching IWM. That's why my trend line is already in there. If we get back up into that area, and I love that these are small bodies. Because if I get above this a little bit, or if it just, dies in the water right there, I can use that small body to trigger potential trades to the downside. And that would be doing, like I would buy the 125, put on the IWM that was probably in, the regular monthly options that were in either June or July. And I would probably get about a 0.5 to maybe a little bit more than that 0.5 delta on those. So for every dollar it moves down, I would gain 50 cents. and until it got down far enough to be able to, and so down far enough where it would eventually the delta would grow, and then if it got down far enough, it would go to a 1-to-1 type ratio. And as we can see, yeah, this got a, I have to say, the Russell got a really nice rebound off of the 50 today. Now, will this hold? I don't know, because look at here, the true strength indicator is looking weak. The momentum is divergent, and you got the same thing going over here. But we shall see. Did that help? Did that more than answer your question, Dorothy? Okay, moving along. Just for everybody, active trend trading. There may be some new folks on the webinar today, and I just want to kind of focus on what we try to do. We try to focus on the 5 pillars of trend trading or any type of system trading. We want to know what to trade, when to enter, when to exit, what strategy to use, and what to expect. And we try to provide that in a clear and simple manner. This last week, we've been looking at longs in Fleet, NOAA, and ARRS. We have an existing long going on, which was doing quite well early in the day on, it will come to me. Okay. Early warning alerts. We closed out our early warning alert after we'd held it for like approximately 21 days on the second half of the trade. For the total, we were up about 5.28% within that period of time. And so here is a trade that we basically highlighted this past Wednesday night. And we had an open order for it yesterday, did not get filled. We put the order back in this morning. And this is a planned trade, a design trade. We noticed that Fleet was FLT was finding support down here at the 151.82 level. And so we basically, as it came and rebounded off that level this morning, down actually in the 151.82 level, we were filled on 130 shares at 151.98, our planned target. And this is what we do, is we basically plan where potential targets are based on, where the technicals say the target should be, to take off a little bit of profit, identify where the stop is, and typically our stops tend to be within 3 to 5% of the purchase price. So our expectations on this particular trade is for this pattern to hopefully complete, pop back above the 50 and the other moving averages, and roll back up, eventually back up here to the 164 level, where we'll look at taking the rest of our profits off. There may be opportunities as it moves back up this line to add to the position to give us a full position. And again, we'll take some profits off here at 157. That way it makes it a lot easier to hold on to the rest of those shares as it continues to move up. Here's where we sit as of today on our trades we've done so far for the year. And then I would just want to, for a limited time only, we will be, for the folks who join us for the How to Make Money Trading Stock Show, I want to offer this as our regular membership for on the monthly basis for the active trend trading portion, includes all the training, is $49.99, and but we'll offer it right now, limited time, 40% off, $29.99. Early warning alerts that folks have had really great reports on how well people are doing with early warning alerts. This is a yearly subscription because typically we're only going to have somewhere between 3 and 6 alerts in any 12-month period, and that's $349. Well, it's $8.99 per year, but we're offering it right now for $349. You can go to this website, the website here, for this special introduction offer. I want to talk real quick about some new stuff that's coming down the line. The question is, are you ready for the crash? Many of us believe that the market is going to go into a correction sometime between now and January 2017. And so to be prepared for that, what I have been doing and running the last few weeks, and I'm going to be introducing this to the premium members of the Active Trend Traders this coming week, is a way to basically be prepared for the crash, but also generate some weekly income. And back on 420, which happened to be my anniversary, but anyway, 420, I entered a trade for the January 2017 $210 put. I paid $21 for this. Currently, the price of that is sitting at about $19.68. I'm down 8% on those particular 4 contracts. But in the interim, what I've been doing is each week I turn around and I sell premium against that. And so every week I collect a little bit of money against that. And what that does is it reduces my cost basis of what I paid. So I originally paid $21.45, but since 427, so over the last month, I have collected enough in premium to pay my cost basis down to $13.15. So my total return on my original investment is 38%. And what this does is now, if the market sometime between now and January 2017 does go into a significant correction, I'll be able to benefit and profit from that correction, because who's to say that we're not going to go into a 10, 15, 20, 30% correction, because this particular bull market has been in place for a long time. So guys, Active Trend Traders, this will be offered to the people who are signed up for the specialty option trades. And so you need to let me know if you want to, a lot of you already signed up for those. If you want to get in on those, just shoot me an email and I'll send you the link to be able to sign up for this. But if this is interesting, because like I said, it's a way to, one, be prepared in case we crash, but secondly, and then generate weekly income to pay down that price basis. Because if I keep up at this rate, by 2017, the side benefit of this, by 2017, January 2017, if I keep going at the same rate, well, I will have replaced, my objective is to replace this entry price 2 times. And to do that, I need to generate about 52 cents, 53 cents per week worth of option premium. And that will have, and when you think about that, okay, that means, in other words, during that year and a half, we will have doubled our investment. So are you selling? So the question is, are you selling the puts to collect premium, or to, I guess, are you to reduce cost? Right now, Cool Winder, I am selling it to reduce my cost. If we keep tracking the way we are, once we get our cost to 0, then we can either do one of things: wealth building or generating income. And so, anyway, that's all we have for today, folks. I will say we'll see you next week. Have a great weekend. I'm going to be looking at some charts. And one of the other things I want to share with you just real quick, let me see if I have this up. I do. Okay. Here is the spider trade I was just talking about, but I'm also doing a similar thing. And so introducing this on the other side, this is basically, I'm long a January 2016 call on IWM. And as you can see, I'm selling premium against that on a weekly basis. And this was, we were doing this as a test bed set. And so we entered this trade on 429. And 429, and this is a call. And basically, almost every week we've been selling some premium against it. We need to collect about 47 cents on average per week to double our investment. And so as of right now, our cost basis is down to 559 for this particular. This is the January 2016 124 call. This is the 123 call. And so we're reducing our cost basis. And same thing over here on the, this is from the 123 that I'm doing in another account. So it's a, and this is just going out to 2016, which is just another 6 months from now. But I've defined how much I have to make per week to be able to double my investment. That's how I design the trade. So like I said, if you're interested in that or you're just hearing about this kind of thing, Dorothy, this is going to be one of the a highlight of the next article I do for Forbes. So with that, again, who's ready to look at some stocks? And we'll jump over to the and thanks for being with us today. I really appreciate it. We'll look at a few stocks. I've got to get into San Francisco and get some new glasses, and so I'm gonna have to cut off right at 11 o'clock today, guys. So let's see how our oops, didn't like that. It's INCI IN. It was really busting up this morning, almost, and not quite a breakout yet, but getting close. This is the one where we entered this. We're going to trade from this. We're in a small position now because we already took some profit off at about 103, 102.76, and 110, and now we're just letting the rest of it grow. And this probably would have been an okay place to add to, but now we're just, it's staying above the 8 days, so we'll just let that run. ARS was actually showing us a little bit of positive traction today. I'm kind of liking it again. We had entered this trade back over here, almost got taken out on Tuesday of this week, but now it looks like we're getting perhaps some positive traction to start moving back up with a target up here in the 35.50 level up to the 37 level for some of our potential targets on this one. The trade we entered earlier today on Fleet, how's it doing? It's positive, but it's still stuck in this trading range. And once we get the break out of the trading range, it should do okay. And we've got, and somebody sent me an email to ask me about somebody asked about the on Fleet, why am I keeping the stop so tight? In other words, I've got it like 10 cents below this low, the low here, which is 150.60. And the reason for that is because if it breaks 150.60, it's going to potentially fall down here to 147.50-ish. And that's telling me immediately I am wrong. So I'm going to be out of there. So let me answer a couple of questions. Cool Winder, did I answer your question on? Yeah, I answered the question on that. Nice plan. Thanks, Marty. Let's see. Tracy asked a question. ARS, when do you punt? I noticed it has been going sideways for 16 days. That's a great question, Tracy, and I'm going to answer that right now. Oftentimes, when a stock is going into a pattern that looks a little bit like this, kind of a cup or a saucer kind of thing, at approximately the midsection of just before it starts to move up, it will put in a little spike low where it spikes down a little bit, and then we'll start returning and emulate or mirror this same picture you see over here. And so that little spike down right there, that may be shown as, now that we've started to move a little bit back up, the indicators are looking better. we may now be moving into the upward phase of the right-hand side of that. And so I'll be hanging with this now, because once it starts up this side, it may take, oh gosh, to get all the way back up to, if that's my midsection, that is 23 trading days, Tracy. So I may have to just hang on for those 23 trading days to see what happens. Let's see, GTN. Okay, GTN has okay volume. It's popped up. Got a nice move, breaking a new highs, it appears. Yep. And so if you're already in this, you can hang on for to continue to profit. If you're not in this, you can go down and look at, okay, it had a breakout level at about 15. Watch any kind of a pullback back towards that 15 level for it to proceed up, because oftentimes when you get a breakout above a particular resistance level, there will be a pullback. Doesn't have to pull back all the way to the breakout level, but there'll be a little flag pattern, which we talked about on Wednesday night, and then a rebound for there. And the challenge is just waiting for the pattern to set up. Nice looking stock, Joe. SDX. Susan SDX, Seagate Technology. Pretty nice patterns looking on the weekly chart. Right now, it's currently in a downtrend, as you can see here. It is if this turns out to be a higher low, based on this low over here, because right now we're back in this little downtrending channel. Which it may stay in for a while. We're in this downtrending channel below the 50-day moving average. So as long as it's working within that channel, it's got it can do the one or two things. It can fall all the way back down to the bottom of the channel, or to this level of support here, and then rebound. But we need to it needs to right itself above the 50-day moving average again. Before I'd be looking at getting serious on the alongside trade. If you're some people have a lot of Seagate Technology stock because of I think it's one of those stocks where people used to work for Seagate, and so it does provide some opportunities for doing covered calls and or option trades on it if you want to generate some income. But right now I would be if I was looking to get in it for the first time, it's got to prove itself and kind of come back up, either retest down here or break back above the 50. Let's see, question NTI. Okay, NTI, fairly low volume stock. Is this since it's Northern Tier Energy, is it oil pipeline or what about that? Hey, Warren. Anyway, it's got fairly low volume. It's well, actually, no, not. Let me look at it again. Yeah, on average, about 450 shares. I don't know this much about this particular stock. I have to run it through the stock checkup on IBD's website to see if it had good fundamentals or not. It does look like it's trying to potentially. You can almost see this as putting in kind of a quasi reversed head and shoulders type pattern. If we get a rebound and it pops back up above this level, or we get a reversal signal here off the 20-week line, then that might give you some potential to the upside. Let me expand that, because who was that? That's Susan. Hey, Susan. Yeah, we'll take one last look at CAM. Okay. As long as it holds the 50 there, we want to see a nice little bounce here. You can draw your flag line in across here, Susan. A couple of different ways. You can, if you draw it directly to the body of that big green candle there in the middle, and just look at those where the wicks on those candles just being where it Pinocchioed above the resistance line. You're going to be looking for it to get a close above that resistance line or a support bounce down in this area here, which is what? At about the 50, 80 level. We covered that type of entry, and that's the same kind of entry that we use with Fleet. This week is where you've got a defined level of support and just designing a trade around there. So I don't know if you're in the trade or not, but if you're looking to get in the trade, it still looks like it's dancing around a little bit. You're below the true strength line, below the zero line, which tends to indicate you're into a downtrend. A little bit of upswing on the momentum, but the volume, well, the good thing is during this sell-off here, the volume's been low. I like it better on a weekly chart. This is a nice flag pattern here down to support. If you get a return back, a breakout above 52.39, you might be looking at this. Does that help, Susan? Hey, Dave. Okay, hold on a second. You guys are running past me. Okay, why would you enter long in Fleet when the market is at resistance? Marty, I believe that Fleet, as with a lot of other things, or a lot of other stocks, is even though the market is at resistance, I think this is going to continue to still be a market of stocks. And so there will be some stocks that are going to be absolutely outperforming the market, as there typically always is. And so I'm liking the setup that and the past patterns that Fleet has done for potential moves. Because if it gets up here above the if Fleet will rebound and get back about 155, we make 155 our stop loss for a trailing stop, and we still pulled in a nice little profit. SWKS, whoops, not SWIC. Okay. Dorothy, on SWKS, we've had a really nice, it had this nice little, pop breakout retest. And, I kind of ticked off of myself because I didn't pick it up at this, where it did this breakout of this cup here earlier in the week, because it had a nice rebound. Now, right now, if you're in the stock, you just can be trading the 8-day moving average as your 8-day EMA rule for a stop, or do your extension from 90 up to 102, which is about 12 points, and so 12 points from that would put you up about 114, where it could be the next potential profit target level. If you're looking to get in, you're going to want to have a rebound off of the 8 or even the 20. And so that's going to be one of those where you're just going to have to be patient on. CUDA was looking pretty good earlier today. But CUDA is also one of those where we got stopped out twice on CUDA with small losses. When it fell down here and put in this nice hammer, rebounded, and it has rebounded all the way back up to the 50, which is a strong resistance level. And so I said I am not going to entertain getting back into CUDA until it proves itself. It still hasn't 100% proved itself, because this is the low. And while it has got back and up to the resistance level, I would, in order to prove itself, it needs to do one of these, one like that, and like that, so that then we can define a higher low. That would be my first indication on that. Does that help? Who put that in? Was that Tracy? Is that good for you, Tracy? KR Krugers. Okay, Warren Kruger looks like it wants to lower high, lower low, took out this swing low. So it looks like it wants to continue to proceed down. How far down? Who knows? But you've got this nice little, let me draw this in over here. You can draw this trend line over here, this trend line over here that it is working within. And this is kind of interesting. Kruger tends to go into also do some trend channeling. So we can lay that in there. We can duplicate it, move it down to this last swing low. And that may be a new channel that it's starting to move into. So how are we doing for time, folks? Okay, we're doing fine. Does that work for you? What was the rest of your question? Yeah, I'd be looking at it for a short to about 69. Yeah, I mean 69, that would be a good area because that way you would be buying it on before it's most likely to try to strengthen up. And that's what I like to when I'm looking at levels of support and resistance is where we have a strong, and that's, I'll highlight this to everybody, is we have strong support here at about 68. So if just like if we were trying to buy into something and sell it out, well, we knew that it had this strong resistance up here at 77 approximately, then putting a trade to sell it at 76.50. That way you're selling into the strength just as the others are you're selling into strength just as the final buyers are starting to come in thinking it's going to break out. So let's see, CUDA we did, YY, KR. What's YY doing? YY is looking kind of interesting. It got all the way up here to 70, this resistance level, and now flipped and has reversed. Let's see what takes place when, and this may be one of those where I'm going to be looking for YY. Let me get. Here's what I love to do on these. I'll throw in a Fibonacci retracement on it. So where is if YY is going into a further uptrend, what do we expect? We expect it to reverse somewhere between the 38 and the 61% retracement off of this move. That's typical. That's a classic move. And so where does that correspond to? Well, by the time it gets down, that 50-day moving average is going to be up there about the 61% retracement. So that would be an ideal place for it to potentially bounce. Well, if it does bounce there, what does that also tell us? Well, that would be a higher low, which might mean that we may be going into a more sustained uptrend. So keep your eye on YY. Good one, good call. Who was that? Where did the YY person go? San asked about what averages do you use for support and resistance. The moving averages that I utilize, San, on my daily charts, I use the 8 EMA, the 20 EMA, the 50 EMA, the 100 EMA, and I use the whole 8-day moving average. And I do a slight change on that. Jorge, the indicator with the pink line. Are you talking about this one up here? That's the whole moving average that we've did a presentation on the weekly training about 3 weeks ago. You can check on the online to get that training, okay? Let's see. KR, YY, AA, and ANET. That was co-winner, okay. AA, Why would I want to invest? No. Um, hmm. Alcoa looks like it's being impacted by the economy. It is dropping, and it has broken down below that swing low. So where's it likely to go? Typically, it's likely to go another, at least this far below it. That'd be a measured move, which if we put that down, activate, move that down to that low, probably getting about $11 and maybe lower. And if we really go into a really significant correction, it'll go even further than that. Okay, ANET. Yeah, I'd have to do the stock checkup on this and the IBD page, but right now it is moving up nicely. This move here has been approximately from high low where it took this bounce. It's put in about 10%. So for me personally, it's okay range and magnitude of the move on a daily basis. You're doing about a 3.83, $4, $2 on a weekly basis. So not bad for a $70 stock. And it looks like it's trying to turn back up. As you can see, the slope of this TSI line going up means it's meandering and it doesn't have a lot of force behind it. And same thing with the momentum, just kind of not really taking off and spiking that you get from those real fast moves up and or down. Facebook. What is Facebook doing today? Facebook's going sideways, guys. I mean, it is, and this is another one of the stocks that does not have a lot of weekly range. $2 on a, $2, $2, $5 that day. I think that was almost, and then $2, and so Facebook is not one of my favorite trading entities just because it doesn't have the range. When I'm talking about range, I'm talking the high to low, and it just doesn't have that. And so I would much rather I would much rather go even just trade TNA by itself because it has really nice daily movements and weekly movements, and where if you carve out the middle of that, move, that's when you can do okay. You can make $2 or $3. But just a quick analysis on Facebook. If we hold support, it's really struggled here on the 50. The 50 is rolling over. It looks like it wants to continue to, kind of fall apart. Third lower high, lower low. Is it going to be tracking into a downtrending channel also? We don't know. We know it's got good, strong support down here at about 74 and 54. So, what kind of range is that? That's about, 14%. 14% move, and it's just kind of laterally moving in that, and that's where it's been working all year long. And with these long tails on a weekly chart, it's telling me that sellers are quick to come in on Facebook right now. Okay, White Wave Foods. Okay, volume. Right now it's nice and consolidated. Probably looking for a little bit of a pullback or some consolidation here before it breaks higher. Came down off earnings, bounced off the 50, nice rebound, pull back really quick and a little flag, and then it's rebounded from there. So I would say, I wouldn't buy it right now. I would watch to see what this particular, because this is a shooting star right now on a weekly chart. That may lead to some more downside pullback, but you can also draw in this, I would say this level about where you've got some pretty good, several days of closes about there. and maybe a little bit higher than that. That might be a good level to look for some potential bounces if you're going to try to go long. Okay, sounds very good. What is the indicator you have in the pink? Covered that. Guys, I think we've hit all the stocks. It's 11 o'clock straight up. Thanks for your time. Have an absolutely great and wonderful weekend. And thanks for all the wonderful comments about the new grandson and all that kind of stuff. Have an awesome weekend. God bless everybody. See ya.